Good morning. Welcome to the Market View for Wednesday, the 6th of August 2014. Starting off with the 30-minute chart, we can see that we had a sell signal yesterday morning at 8 a.m. and the market trading down to the psychological level there of 168.50. However, notice that the volume in this price bar here is greater than the previous red candle, indicating that there is some buying pressure in the market. And when you get buying pressure, what it means is that the range of the price bar is less than the previous bar, but the volume is greater. And no doubt the professionals had a heads up that the services PMI figure, which was released during yesterday's session, a high impact news item, was forecast at 58.1 and came out at 59.1, and they're sending the market up 39 pips in 1 minute and reversing the current trend. But there was a pre-warning here. Two things, of course: high impact news items move the market, and secondly, we had the market failing to move lower after the trade was marked up as well. So let me just show you what I mean by that. You can see the prices trading to the entry point, then finding support, which we've seen many times before, in particular prior to a high impact economic news item, and then the market just reversing. So if you didn't get out of the trade, then you were looking at around 20 pip loss on the trade. But high impact news items again always come with a caveat that the market can move against us. So then we see the market trade more or less 50% plus, in fact over 50%, because at 15:30 we see the market trading down to the more or less the low of where the market actually started from. So you can see that just here, which is not unusual either, I have to say. When we get those sorts of economic news items, it's used to take out the small traders, and then the market generally comes back to where it started. So we see the buying coming back in again at the 168.50 level, and the market then going back up to where it had at the release of the services PMI economic news item there. The market now just trading sideways back towards the DP level. Same picture in the 60-minute chart as well. Again, if I just put the crosshairs back on for you so you can see inside of the bar before the economic news item. There we have the sell signal, and again you can see this huge volume, less of a trading range, the market coming off the lows, and again you see the buying is far greater than the previous bar selling, which we see there in the red. So the market just doing a straight reversal there, and again you see a potential sell signal which isn't filled, a potential buy signal which isn't filled as well, and just nipping back to the 30-minute chart, exactly the same there, which I'd overlooked there. So again, that same picture, and then the market coming back to the DP level in the 60-minute chart as well. In the daily charts, the market is moving slightly higher and finding a bit of support. Let's just have a look at those fib numbers that we drew in the other day. Let's just go from this high to this low, and you'll see the market at 62% of the rolling fibs that I actually use. So the market stuck between a couple of fib retracements at the moment, stuck in this sideways range. But 168.50 is an important support for this market. So let's see if the market holds at this level. In the economic news for today, we've got trade balance figures out at 1:30 p.m. for the US, although let me just scroll back up, it would help. Let's start from the top. We've got manufacturing production at 9:30, and then that trade balance figure that I just mentioned at 3 p.m. and nothing else that should move the market. Just look at the manufacturing production from the UK is to show an increase, and if this comes out as forecast, we could expect the pound to move higher, so just keep that one in mind. In the Dow, the yesterday, the market started to trade sideways to higher, but then towards the end of the trading session moved lower, taking out the 62% retracement. And if I just draw a line across from here, you can see that we are heading back towards the 16,357 area. And this is no surprise really, because as I mentioned yesterday, in the implied volatility, this needs to go to 16% to confirm a new sort of bottom in this market, or to confirm the current pullback in the market. We can see they're increasing yesterday to 13.29, historic going back to 9.28. So there you can see the increase in the chart there, it's reflected. But we need to head towards the 16% for this market to show that we do have a 100% increase in implied, and therefore a potential bottom. So we could expect a bit of more of a move to the downside, a bit more of a violent shakeout, just to create and increase the implied volatility there to give us that potential bottom in the market. Right, that's it for this morning. All things being equal, see you in tomorrow's market view. As ever, thanks for your support, very much appreciated, and also for watching.